pricing on the LME is actually now higher than pricing in Shanghai. Is there a more nuanced reason that's not very obvious why this is the case? Because normally that's not a premium, that's a discount. And is there a short-term trading opportunity that you see from this?
Yeah, look, I think that the nuance is very simple. When global investors have reacted to this news, effectively what they've done is they've gone straight to the LME and gone long these commodities. Aluminium, you could see it spiking anything up to $3,000, but overall, on a sort of a 12-month forecast, we see it coming back down again, is sort of the 2,400 sort of mark. So I wouldn't get in front of the freight train here until at least there is more evidence about how broad the US is looking at a number of companies in Russia. But nonetheless, we think that once this price momentum settles down, we think base metal prices from these levels will actually track a little bit lower. Copper, on the other hand, of course, has not run by the same amount or has not been involved largely in what we've seen over the last few days. We're still pretty positive on copper moving higher on a 12-month basis.
OPEC is also in the mix. Ministers are meeting today. Mission accomplished? Glut gone?
Look, I think they'll be pretty circumspect to come out and suggest that they're going to start the pumps up. Largely prices around this $70 mark. In that sort of $60 to $70 range is a pretty of a sweet spot for them. I think the key date coming up, of course, is May 12th, that sort of self-imposed deadline that the Trump administration has put on the decision around Iran sanctions. Clearly, if a line is drawn through Iran on this date, we'll see another pickup in oil prices from here, potentially up to $5, $7 a barrel. So that would put it up around the sort of the high 70s, sort of $80 per barrel mark. But the metrics are very, very clear. So yes, inventories have fallen below the 5-year average. That was OPEC's target. OPEC has clearly stated that a $100 oil price would be detrimental to the market. So there were some earlier reports this week that they were looking at a $100 oil price. That's been turned on its head. So we look at demand this year in 2018 being about 1.3, 1.4 million barrels per day. We look at supply growth at around 1.8 million barrels per day. About 1.5 of that comes out of the US. So while the balance sheet is in deficit, it's tighter today, it is going to get a little bit looser on the 12-month basis. And so consequently, you get a spike to $80, you would see oil prices tracking lower from there.